Hello, my name is Quan. Yeah, whatever. Now I'm going to cover the swing trading concept. So, as you can see, the position trading concept, to do a little bit of review, we've catch the move on the monthly chart, right? Long-term trading, monthly chart, or the weekly direction, something like that, okay? And then we execute on the daily chart. We buy the daily discount PD arrays primarily at the weekly and the monthly discount, because if we buy at the daily discount PD arrays at the weekly and the monthly premium, then price is just going to fall off. Okay, we don't buy at the weekly and the monthly premium. We don't want to buy at premium. This idea is fractal, okay, significantly fractal, which means, why do I emphasize on it? Because on every time frame it's the same. We want to buy at discount, okay, and we want to take out our profits at premium arrays. Okay, so if we're buying at the daily discount PD array at the weekly and the monthly discount and aiming for the weekly and the monthly premium arrays, we can catch the move requires hundreds of pips, okay, more than 500 pips, sometimes 600 pips, 700 pips, okay, and then put stop loss 40 days in the past, because like it's price can sweep the 20 days lowest low and keep being bullish, maintaining the direction of the weekly and the monthly. But if price just sweeps the 40 days lowest low, then it's less likely to be bullish anymore. Okay, so we want to put our stop loss 40 days in the past. 40 days is like a little bit of intermediate term, and 20 days is like short term. So price can easily raid the lowest low in the last 20 days. Okay, so that's position trading concept. So what is swing trading? Swing trading is a lesser time frame discipline, which means we catch intermediate term move instead of long term move on the position trading concept. Okay, we catch intermediate term move, which is the weekly swings. Okay, we catch the weekly swings. So instead of this weekly direction, bullish, we can catch the weekly swing, bearish, bullish, bearish, bullish, bearish, bullish, bearish. Okay, we don't just catch the weekly expansion here or the monthly retracement. We catch the weekly swings. Every swings on the weekly can be swing trading. Okay, it's very understandable, very easy to understand. And we execute on the 4-hour chart, right? As I've told you before, looking back at PD array matrix extra video, if the monthly is pointing higher, seeking premium, then the weekly is also seeking premium. The weekly seeking premium, the daily also does the same thing. If the daily does the same thing, the 4-hour also does the same thing. It's fractal. We can go as little as you want, minimum 1 hour, 50 minute, 5 minute, something like that, or even seconds. This idea is fractal. Okay, the higher time frame, where is it going, direction, the lower time frame will follow this. Okay, right. So we execute at the 4-hour, and we aim for the daily, weekly, and the monthly. Right, the position trading concept, we only aim for the weekly and the monthly, because the weekly and the monthly PD arrays are the resistance points. If we're bullish, they act as resistance points, and it can cause retracement, deep retracement, or reversal through the daily chart, through the daily bullish reference points. Okay, because the daily moves back and forth, weekly and the monthly levels. So this idea is fractal. If we look the same, then why does ICT mention about taking profits at the daily levels also if we're swing trading and we execute on the 4-hour? Because the daily chart, the daily PD arrays premium, can also cause the 4-hour chart to reverse, right, or deeply retrace. So if we keep buying at the 4-hour discount PD array, right, and as soon as we meet the daily premium arrays, we stop buying at the 4-hour, right? It's fractal. This idea is fractal. So we want to buy 4-hour at the daily discount and aim for the daily premium first, and daily highs, and then the weekly and the monthly premium arrays, right? Okay, so we want to buy 4-hour discount arrays at the daily discount, all right, and at the weekly and the monthly discount to catch the weekly and the monthly moves, okay? Because swing trading is to catch the weekly swings. For example, like this. If we're here, we're at the weekly premium, right? we don't want to buy here at the 4-hour or at the daily levels to either position trading or either swing trading. We don't want to buy here because the as I've mentioned previously, the more we get into the monthly and the weekly premium PD arrays, the daily arrays or any time frame lesser than the daily intraday, okay, will less likely to provide support, right? We don't want to buy here anymore, swing trading or position trading. Okay, short term we'll cover it later, but swing trading and position trading, we don't want to buy here anymore because price will fall from the daily. If it's easy to fall on the daily chart, then it's also easy to fall on the 4-hour chart or any time frame lesser than that. Okay, so if we're here, price will likely to retrace back because PD array matrix concept. If we're in the premium, price will want to. I'm not gonna say 100%. We will have to wait for price indicates that it wants to go lower, displacement or something like that, break structure to go back to discount. But that shift, okay, bearish break structure, it happens often, okay, at the premium level in terms of monthly and or weekly chart. Okay, so if we catch the weekly swing here, the weekly chart will likely to come back to discount. Okay, so this move we want to short here to come back to discount, and then when we're at discount PD arrays, because the monthly chart is pointing higher, we can find sensitivity at discount, weekly discount PD arrays, and seeking weekly premium. Then from here we can buy here using the 4-hour or the daily chart. Okay, this applies to both swing trading and position trading concept. Okay, we can either buy 4-hour or daily here at the weekly and the monthly and or monthly levels. Okay, and to aim for the weekly premium up there. Okay, this opens up the information, the lack of information from the position trading concept. Okay, we can buy here position trading and then aim for the weekly and monthly premium up there to catch this move. Okay, this move is usually hundreds of pips, right? Okay, so if we're swing trading, we execute on the 4-hour and then we want to buy at the daily discount and primarily at the weekly discount also, because if we buy in at the 4-hour discount, at the daily discount, but this daily discount and 4-hour discount is at the weekly premium, then price will likely to fall off. Okay, we can't catch a move that if we can catch this move, it's just going to expand up to a daily premium or something like that, and it's going to reverse, right? We can't catch big moves, right? Even if it provides support, a little support here on the daily level, it can't expand as we want it, like hundreds of pips. We want to buy at weekly and or monthly discount PD array, okay, and sell at weekly and or monthly premium PD arrays using the 4-hour and or the daily chart to swing trading and or position trading. Okay, sounds easy to understand, right? Okay, so we buying at the 4-hour discount. It's either at here or at here to aim for the 4-hour highs and the daily premium, and then the weekly premium, and then the monthly premium arrays. Okay, the more we get into the weekly and the monthly premium, as ICT said in the swing trading concept videos, the more we get into the monthly and the weekly monthly and or weekly premium arrays, we want to get out of the position. Okay, we want to just keep as little as we want, as little as possible. Okay, our position, because price will less likely to continue the trend there. Okay, sounds fair enough? So this is swing trading concept, right? Swing trading, buying at the 4-hour discount at the daily discount, because the more we get into the daily premium, the 4-hour will fall. But if we're buying at the daily discount and we keep buying until we met daily premium, but this daily discount at the daily premium here, if we want to catch the swing move or the position move, which costs hundreds of pips, we can't buy it at the weekly premium. All right, because price will just, maybe it expand on the daily level a little bit up here, and then it will reverse. It will likely to reverse because we're at the monthly and the weekly premium. We want to do that. Want to do all this, buying it at the 4-hour discount, at the daily discount, at the weekly discount, okay, or the monthly discount to catch these swings up. Okay, all right. I'm not saying like if we're at the weekly and the monthly premium, the daily cannot provide support anymore. I'm saying like the less probability it's gonna provide support. If it provides support, it's just gonna go up into daily premium, which we can short term. Okay, which we can short term. But if we're swing trading or position trading, we want to catch the big moves, right? And these big moves only occur at the weekly and or the monthly discount level. It expands up towards the weekly and the monthly premium levels, okay? And if we're buying at the 4-hour, the 4-hour can reverse from the daily premium levels, so we have to take profits at the daily premium levels as we execute on the 4-hour chart, okay? As we swing trading, understand? So swing trading, we catch, by and large, okay? We catch the weekly swings, okay? Every weekly swing is intermediate term itself, and we catch the intermediate term move on price chart. So this requires also fundamental aspects, C210C, okay? To catch these weekly swings, also we need weekly and or monthly swing. Usually it needs fundamental aspects. For example, C210C, first and foremost, C210C, something that has happened in price for the last, like, I don't know, 40, 50, 60 years, okay? COT data, okay? Are the hedge funds, are the institutional, the hedge buying or, sorry, not hedge buying, net buying or net shorting, okay? To indicate that there is a support on the chart. There is a support on this movement on higher time frame, on long-term or intermediate-term basis. So C210C, COT data, or interest rate, okay? It can be interest rate. Is the bond market supporting this? Because if the bond market is waiting, it's shifting bearish, it will create a higher yield on the bond market. The higher yields on the bond market indicates that the US dollar or something like that, or the pairs that you're pairing up with, I'm using the situation where the US dollar is inversely correlated with the bond market, which is the interest rate market, okay? Is this bond market supporting the US dollar bullish, okay? For the US dollar to push bullish, then the bond market has to push bearish, okay? Which means they're raising interest rate. If they raise interest rate, the bond market will wane, okay? The trend of the bond market will become less powerful, okay? It will provide some retracement on a high time frame basis, weekly and or monthly, okay? But usually interest rate is kind of long term. It's kind of like more than 3 months movement. If the bond starting to shift bearish or something like that, it would create some kind of a pressure on the day chart. On the DXY to being bullish. Okay, most of the time it's bullish, but we can use this. So C210C, COT data, interest rate market, and or the S&T divergence. Okay, we can see like divergence on different charts that are inversely or correlated. Okay, inversely correlated or correlated themselves. Okay, to locate institutional sponsorship. Okay, and yeah, that's it. That's swing trading. This is swing trading concept, and we also cover some of the position trading concepts, so we understand the whole picture of swing trading or position trading itself. Okay.